All right. Good morning, everybody. Welcome back to another episode of the Tim and Tim Show live. This week, we're talking about building confidence in real estate transactions by executing on your certainty to close. I feel like this is a timely conversation for Tim and I, and a lot. Full transparency. A lot of these conversations that we have are based on recent and current events. So it's not like we're just pulling things out of thin air here. We're talking about real events, real problems that we're dealing with, things that uncertainties that we're facing, anything that you can think of, any kind of statement that goes in there. These are real life examples of what we're doing on a day-to-day basis on the back end of buying, selling, managing, operating, and everything in between of multifamily transactions in the Carolinas or the Sun Belt, really. So Tim, how you doing today, man?
What am I gonna say?
Can't
Living the
complain.
dream. Can't complain. Living the dream. Couldn't be better.
I know. You're
Yeah.
not one for small talk. So, all right, let's get into it. And certainty to close. What's that mean to you, Tim?
That to me, that means a willingness to partner to get to the end goal, which is the closing table, right?
That's
Uh,
that's fair. Yeah.
yeah.
Because certainty to close is not one way or the other. It's on both sides of the table. It's buyers and sellers have to execute or display their certainty to close because Tim and I, we lost, geez, how much money did we lose? Over 10 grand, maybe 15 grand on this acquisition that is not coming to fruition.
Yeah.
So certainty to close on the seller side was not there, and that hurts us because now we're out of pocket $15,000 and 2 business days and travel days and all this other kind of stuff that we had to do to find out that the sellers did not disclose everything the way we thought they were supposed to be disclosed. In from a buyer's point of view, certainty to close of the seller is that everything is properly documented and transposed to us so that we can make it accurate and make accurate assumptions during the LOI process. And when we get onto a property, that there's no surprises. That's
Yeah.
certainty to close for a seller,
Yeah.
at least in my perspective. Tim, do you have a different opinion there?
No, I don't at all. In fact, I don't at all. I mean, because I think sometimes there's a mistake made, right? Like that certainty to close means that whatever you offered in an LOI or whatever was negotiated in the PSA is exactly how the deal will close, right? Like,
Yeah.
and sometimes I think people confuse that um, with true certainty to close, right? Um,
Agreed. Yeah, agreed.
yeah,
Um, I know that everyone thinks a certainty to close is that what you put on paper is absolutely what will happen and you will perform on that. Well,
right.
yes, we will. And I say this all the time. This is only one of 3 deals that we have ever backed out on because there had to be a significant retrade due to due diligence findings.
Yep.
I say that because just because you put it in a purchase and sale agreement doesn't mean that that's going to be what the final is.
Yep.
If everything was presented accordingly and disclosed appropriately and accurately portrayed in the packages, essentially, then we would have made a more accurate offer. And if you didn't like our more accurate offer from the start, we wouldn't have put it on a contract. I mean, I don't. At the end of the day, Tim and I don't like to retrade on deals. We don't
No.
prefer to. And we tell people up front, well, hey, if you tell us everything up front, we will make you an accurate offer. We actually, I even go through the underwriting with the brokers. I mean, I literally had a call
Yep.
last week, different transaction. Had a call with a broker last week, went through my income assumptions, went through my expense assumptions, went through my CapEx budget, went through my business plan, my cash burn, my holding costs, my all-in costs, my refinance price per door, my exit price per door. I mean, I went through the whole kit and caboodle, right? And then I said, okay, with these assumptions, how do I make money at this price point? And he's like, you know what? Everything is fair and reasonable. And to the best of their knowledge was represented accordingly, and I underwrote to it. And they said, you know what, that's not unreasonable. So we made our offer where it was, and nothing really came of that point. But at the end of the day, it was properly transposed to begin with. We do the same thing on almost all of our acquisitions. If the broker and the seller are interested in knowing where we're underwriting our deals at, because we've said this before. I mean, Dennis Russell, I know you're on the show right now, but I know you've heard us say this all the time. But I'm transparent, honest. I got nothing to hide.
Yeah.
And I'm going to go through your deal and I'm going to tell you exactly what I'm underwriting to, because maybe there's something that I don't know about your deal that I should know. Right. So, that would be ignorance about not finding out more information on the deal. And the best people to talk to about it are, the broker and the seller. And maybe I'm doing something incorrect on the deal and they can guide me and tell me what the right way to do it is. But let me tell you, when you go through that exercise and you go through your underwriting and you go through your offer price and your business plan, and more importantly, I forgot to mention this piece, you tell the other party what level of returns you need to get in order to secure the deal. The only variable at that point then is the purchase price, right? So you disclose all those types of things. Well, if everything is represented accordingly, we do due diligence and we don't find anything that is astronomically out of plan that we've already discussed right here, we'll buy it.
Yeah.
Right. But if we come into finding that the buildings are sliding down the hill because you didn't tell us that, and every single building, which there's 30 of them, needed pilings. I mean, you're talking millions of dollars of capex that was not disclosed. Of course you can't follow through with the PSA that you had there.
Yeah. Yeah. And man, Tim, you bring up a good point, because guys, we go into negotiations with exactly that phrase, which is like, hey, if everything you've presented to us up to this point is accurate, our LOI stands. This is where we would project we close, right? The only thing that changes that is if we uncover something during due diligence that was unexpected, right? And guys, we'll even tell folks, we're probably a little too honest sometimes about things. We'll even tell folks, hey, listen, there's a fluff factor here, right? Like, if we're offering you 10, we probably know that we're okay at 10.2, 10.25 or something like that. So, hey, if we're in 2-3% of what our offer is coming out of due diligence, we're probably not bringing that up, right?
Right.
I mean, we're not the guys on a $10 million deal who's going to retrade you $25,000. We're just not right. So, but when you offer 32 million and you come back with an extra 3.5 million in capex and cash burn, we probably need to have that conversation. Right.
Yeah, you're talking 10% off, right?
Yeah.
I mean, my general rule of thumb is if you're somewhere north of 5% off, then you got to have a conversation.
Yeah, and especially, and guys, it's not all cut and dry. It's not all about the numbers too. It's also about the risk, right? And and just not to give you too much away, but part of the conversation Tim and I were having during this whole thing was, hey, it's 10%. Here's the number, and what was a really good deal with a lot of risk has become a marginal deal with even more risk than we thought, right? So now it was like, hey, do the returns meet our minimum numbers that we'll do a deal at? Yeah, they did. I mean, they hit that, 15, 16 IRR that folks are kind of like, that's the bare minimum. But with the level of risk and headache, brain damage involved, it just doesn't make sense, right? So So you go back to talk, right? And one of the comments back to us was, hey, we were told you guys are the certainty to close guys. And I'm like, yeah, we are. We are 100%, and had everything we looked at during our pre-inspection walk and pre-LOI walk and our LOI, what we were told going into it, had all of those things checked out. We wouldn't be having this conversation. Yeah, it's always interesting because I always feel like the certainty to close. You're the certainty to close. You told us you had certainty to close. It's like, yeah, but hey, things changed, and I'm still here to close it, right? Like that wasn't the conversation. It wasn't we're backing out. It's like, hey guys, some things have changed. Let's talk about how we continue to move forward and get to the closing table, right?
Yeah, I think a lot of people misrepresent that certainty to close is always on the buyer. Right. And yes, there is a lot of
that's a good way, Tim. That's a good way to say it.
The certainty to close is not always on the buyer. The certainty to close is on all parties involved.
Right.
It's with the seller, it's with the broker, it's with the title agents and the insurance companies. And your equity, right? Where's your equity coming from? I mean, the biggest one that everyone harps on is where's your debt and equity coming from? And if you have both of those things figured out, you have certainty to close.
Right.
Okay. Those are two big check boxes for me as a buyer. However, there are more than just those check boxes for other parties involved in the transaction. Obviously, we kind of talked a little bit about the certainty to close on the seller side, that they're, giving all the disclosures and inspection reports and being truthful about the property and that kind of stuff. And, what's that saying that all buyers are cheapskates and all sellers are liars, right?
Yeah.
It's such a difficult thing to navigate through. But all I can tell you is that you got to have you got to know what your yes no criteria is. And Tim
Right.
and I were having this conversation, and I brought it up to him about, I was like, these level of returns we can get on any deal
Right.
anywhere, right? This is our minimum standard that we underwrite deals to. What makes me want to do this deal? Nothing really. It was like, I brought it back. I always like to break things back to like very, very simple terms. I give credit to Tim Bratz about this because he kind of framed my mindset here. It's like when you're buying a multifamily property, you got to think about it like flipping a single family house. You got to be all in for a certain percentage, and there has to be yield, right, between your all in
Right.
cost and what you can sell it for, right? And one of the other things that people commonly talk about in the single family fix and flip space is the deals that are full guts are going to take up 100% of your time, 100% of your budget, and make you the most marginal level of return.
Right.
And I was like, Tim, what does this deal do for us that any other deal couldn't do?
Right.
And it was like, nothing really. And I was like, so then we're going to have to hire, a new regional manager, a new construction manager, maybe a project manager, on-site managers, maintenance guys, et cetera, and so forth. And I said, all for what? Just to receive the same level of returns that we could go buy this 100-unit property over here that all we need to do is own it for 5 years and
Yeah.
renew the leases and turn the units and get the same level of return. Look at the level of risk there between a property that's
Yeah.
going to be a full gut that's more than 50% physically vacant, 20 to 25% economically occupied, right? So only 25% of the people that could have been there are paying, right?
Right.
Are physically there and paying. I said the returns are the same. I was like, I don't need this. I don't need this
Right.
level of stress in my life to make just marginal level of returns.
Yeah. 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 And Tim, really good point, because as we came back from DD, and guys, the way the process worked is we had like a level of underwriting, and we stress tested all that good stuff going into it. Then we did DD. And as we came back from DD, Tim and I got together and we kind of talked about what we found. Tim started going through the economics of it all, and we started talking through it. We challenged each other on a couple of things, and we kind of came to that yes, no criteria. Right.
Right.
And but at that same time, Tim started to point out, he's like, man, this has really turned into a marginal deal at this number. It's really kind of a marginal deal. And as I start to look at my inbox and the things that come in my inbox every day, I'm like, man, I got 15 marginal deals sitting in my inbox
Right.
that are way better than this in terms of risk profile. Right. Because don't get me wrong, guys, like even at the marginal returns that Tim and I were talking about, there was still a whole lot that could have gone wrong in this deal that would have taken a marginal deal and tanked it. Right.
Thanked it. Yep.
Yeah. Within 18 to 20, we had to do something within 18 to 24 months to achieve those marginal deals. And at the scale that this portfolio was, there was opportunity there to completely shit the
Mhm.
bed. Sorry.
And
Excuse the phrase.
it would have taken 100% of our time, effort, and focus,
Yeah.
100% of our resources to turn this thing around over the next 2 years. Think about the opportunity cost that could
Right.
have been lost because
Right.
all of our time and intention were sucked into one deal that made us the same level of returns that we could have gotten on any other deal.
Yeah. Yeah. And it just
Yeah,
so happened. And it
I
just
really
so
don't
happened.
need this.
Yeah. And it just so happened that I had actually been looking at something else for us that was actually even bigger at around the same all-in price point, right? And so the per unit cost was way lower. So Tim and I are like, we'll just go do that. We'll go follow back up on that one and see where that one is, right? But Tim, you mentioned something earlier. One, the yes no criteria, right? And then
Mhm.
two, guys, I'm going to be something. I'm going to tell you something I probably shouldn't tell you. I don't like to negotiate. I really don't. I really
What?
don't like. No,
You
I
had
do
me
not.
under this I thought you loved a good argument.
No, I love a good argument. I love a good debate. I love a good whatever. I really don't like to negotiate. I really don't want to talk about 10,000 here, 50,000 there. I really don't. So there's something that Tim and I do up front that I really appreciate. And it's exactly what Tim was talking about before, calling the broker, calling the seller, whatever, letting them know, hey, here's what we're underwriting to. Here's what we see. Here's our assumptions, challenge us. And honestly, guys, it kind of helps us not end up in those negotiation rooms very often, right? Like Tim said, I think we've done it like 3-4 times in 3 years, like, after the fact. And it really helps with that regard. And so, when we first started doing this and we would call brokers and I would sit and listen to Vitali like challenge brokers, I used to actually get a little uncomfortable with that conversation because I'm like, oh, it's kind of this has the opportunity to be tense or terse, right? But then you start to realize, hey, I'd rather have that conversation now than later, right?
Yeah, my
For a
biggest
lot of
proponent.
reasons.
Yeah, I mean, you get the broker on your side because you talk about it with logic and reason, and they're like,
Yeah.
this this makes sense. And that's everything that always comes back to my negotiation style is, does it make sense? Right.
Right.
And it's a very simple question. How do I make money on this deal at this price point?
Yeah.
I don't know. Tell me how. I would love to figure out how. I did that same thing last week on that other deal. It's like, look, here are the rents that I found. Here are the rents that you guys are supporting. Here's the reports that I pulled all the rents from. I would love to increase my offer. Help me increase my offer. Tell me how I can do that. Whether are the rents going to be higher? Is the price per door going to be better on on an exit? If so, show me the numbers. Like, prove it to me that I can sell this for $235 a door instead of $225 a door. Right?
Right.
You're talking $1 million difference between on a 100-unit property, right? Said, well, $1 million swing makes a big difference. So tell me how I get there, right? And more often than not, you find that nobody can really support it. It's just kind of empty fluff.
Yeah, I agree, man. And I think I think I hate this. Like, I wanted this to be a much bigger conversation, but I think you freaking nailed it right out of the gate there with like, hey, certain people mistake certainty to close with being on the buyer, right? Like everybody
It's on
puts it
this.
on the buyer, right?
Yeah. I mean, most of it lies on the buyer. Not 80% of it lies on the buyer to make sure that they can come up with the debt and the equity. But it
Yeah.
does also have impact and implications to the sellers to ensure that they're being realistic and transparent about their deals. Potential obstacles that we as the buyers are going to come across that we should know about. Inspection reports and title issues, all of those things being disclosed properly by the seller so that you can come up with a reasonable and acceptable CapEx budget. Because let me tell
Right.
you, as a seller of property, I know what needs to be done to these properties. So if you come to me and tell me, hey, I do have to replace the roofs. Here's my report that, they're only good for the next 3 years. It's going to cost me $100,000 to do it. So then I got to take $100,000 off the price. Well, the way that I look at that is either you're going to do it or I'm going to do it. So might as well let you do it. Right.
Right.
Because $100,000's got to come from somewhere.
Yeah.
So, it's that type of understanding of both sides of the table. And then, it's not just buyer and seller. It's also with the brokers and the agents involved. It's,
Yeah.
insurance, lending, transactional brokers. Any broker under that umbrella is to set realistic expectations with the clients, whether the buyer client, seller client, whatever. Setting realistic expectations kind of bridges that gap. And I think that's what you and I accomplished by having those conversations with brokers about our underwriting, our budget, our business plan, our return levels, our exit price per door. It's setting the
Yeah.
expectations of what we look at this deal as and what level of returns we need to get for that deal. And I can tell you honestly, I've had this conversation so many times now that a broker will be like, "Oh, sorry, I know that what you're saying is not unreasonable. That that you guys are looking for a 16 to 18% IRR." But I know that this deal is not going to pencil at that. They are looking for their avatar for a buyer is an insurance company or family office or something that is more interested in protecting wealth, and they want to pay for a quality asset in a better location for lower level of returns. And hey, that's fine. That's not the deal for me. That's not what my investors
Yeah.
like. That's not what I can perform on. And it sets the expectation with the broker of what they need to communicate with me on the types of deals that I'd like to buy and that I know I have the certainty to close on. Because let me tell you, when you're on the phone with a broker and you're like, hey, look, if they accept this $16 million offer, I'll take it. Like, no questions, essentially. As long as everything that we talked about is accurate and correct, that there's no drastic CapEx things that we needed to budget for or whatever, then we'll do it. Ultimately, at the end of the day, it's that easy. Like buying and selling real estate, I don't think it's really fundamentally that hard. If you can underwrite it to where it meets the levels of returns for your investors, and it actually does meet those level of returns for your investors, you're good. Like close on it, buy it. Like it's not that hard. Conceptually, people think about the risk and they think about, well, what about this? What about that? What about this? What about that? There's always going to be what ifs. You just have to deal with the punches as they come. Lord knows we have dealt with some punches the last 18 months with insurance and tax problems, but nobody could predict that when you're underwriting deals and you're acquiring them. And, it's better to be in the game rather than looking at it from the sidelines. Because like, what if things went the other way and they went in our favor? And then we'd be kicking ourselves that we didn't buy some things, So, certainty to close is not just a buzzword in the real estate industry. It really has meaningful impact on all the parties involved: buyers, sellers, brokers, insurance, title companies, everybody, and tenants. The residents too. Like, gosh, some of these properties that we look at, the residents literally come outside and ask us, please, are you the new owner? Are you going to be buying this please, I haven't had a work order fixed in 2 years, or something like that. It's like, they need people like us to come in and rejuvenate these places.
Yeah, man. Good point. Like, and we could do a whole show on like all of those types of, I mean, but I think it all comes down to like certainty to close comes down to really kind of one big thing. It's both sides willing to communicate and talk about options when challenges arise, right?
Right.
When you show up,
for sure.
Yeah. When you show up and one side's just like, no, it's this is it, right? It's like, well, then you've left me no options, right? If this is it, I can't perform. So there's some other, like Tim and I always kind of talk to brokers and stuff, like, tell me what levers I have to pull, right? And I'll do what I can to manipulate those levers such that it works for both of us. And hey, if you don't give me any levers to pull except price, then sometimes it's just not going to work, right?
Yeah.
And I think that's a really, really key point is, because I will tell you this, Tim and I have gotten down the path of some deals where we ran into a challenge, we ran into issues, with capital raise, something like that. And we've walked into meetings with the seller and said, hey, we're not on track. We're not on track to get to the closing table. And a lot of times most of the time what we found is especially in this market, if you walk in with that level of transparency and honesty, a lot of times they'll look at you and go, all right, let's sit down and figure out how we get there. Right? What do you need? And, sometimes that's a little more hard money down to buy a little extra time to work on that cap raise or work on that loan or whatever. But, again, that's still partnership. It's like, hey, you're giving me time. I'm going to give you a little more earnest money, right? That kind of thing. Those are negotiations that can take place as you go. But
and don't think that that's not unreasonable. I mean, there's another deal that we're talking about right now that they've been under contract for what, 6, 7, 8 months, and they've been working with the buyer in order to try to help them out as much as possible to close on it, and they're not making it happen. So that's it only goes so far. Like it's not a blank check forever. It only goes so far. There's a willingness to learn, but at a certain point in time, you got to cut your losses and be like, hey, look, you're gonna shit or get off the pot. And essentially, we tried to get you there. We were flexible. We gave you above and beyond what was in the purchase and sale agreement. I don't want your earnest money. I want you to close this deal. And I can tell you that the willingness on both sides is there to work, because generally, when you have a property under contract, you are the fastest path to closing. So it's in their best interest to work with you, to give you a little extra time, to give you a little bit of flexibility when things aren't going correctly, to close on a deal. Because I would be lying to you that if a buyer came to me and said, here's what I'm dealing with. I need a little bit extra time. Can you help me out? We have
Right.
done that even on a deal we closed, a month ago. They
Yeah.
needed an extra 45 days because their lender specifically asked for it. Said, okay,
That's
fine. I'm not going to penalize you for your lender literally telling you that they can't close it on time. That's out of your control, and I'm not going to punish you for it. And you are my fastest path to closing. I am going to ask that you release the hard money, release the earnest money to me, so that's in my bank account instead of it being with the title company, and maybe put an extra chunk down. But I'll give you the time that you need. But let me tell you, when you do that, like, the incentive is there and the willingness is there that they're going to push hard and get it done because they don't want to not collect that money again.
Yeah. I mean, especially, and guys, think of one last thing here. In this market, with a lot of the distress that's going on, distress deals are strange. They're weird. In fact, the deal Tim and I were talking about was a distress deal, and they held very, very firm. But at the end of the day, a lot of times, even when you have hard money down, don't look at it as that's sunk money that's lost, right? Walk into the room and talk open and honestly. And just because my guess is a lot of distress deals, they don't really want your earnest money because it's not really buying them anything, right? Hey, I got an extra $100,000, but my burn rate's 75 a month. This bought me 30 days, and now I got to go find another buyer.
Well, you were under contract for 90 days or 120 days. So,
right. Yeah. So, yeah, they may be even in worse shape at that point. So they really don't, their motivation's probably not your EMD at this point.
Right. Yeah.
Gosh,
I've said that so many times. I don't want your earnest money. I want the equity.
Yeah. Gone right now, man. Gone are the days of hey, I'll keep your earnest money, and 5 days from now, I'll have another guy under contract for more money with more earnest money. That's not happening right now.
No, absolutely not. So, all right, guys. Well, thanks for joining the show today. Appreciate you joining. I hope you learned something and got a little bit of insight to what's going on in our lives and how we're kind of dealing with today's market, and kind of reinforcing our certainty to close as buyers, and how we're communicating with sellers and lenders and brokers and everybody in between. So appreciate you joining, and we will see you again next week.
All right, guys. See ya.